2011 was an eventful and daunting year, of course, for the capital markets in general. And it was no difference for the insurance sector. Overall, insurance stock performance in 2011 was quite volatile, as seen here on the NASDAQ Insurance and AM Best Global Insurance Indices. Looks a bit like a topographic map of the Tour de France, doesn't it? With steep hills and deep valleys. It's worth remembering that insurance companies are not just valued on their core businesses, but also on their investment acumen. And declining business activity coupled with weaker equity markets had a substantial impact on sector stocks throughout 2011. Particularly striking with the European insurance stocks in the latter part of the year. European insurance equities declined some 17.6%, more than 2.3 times the general US market. European insurers were actually well ahead of the market in May with a 24% return. But by late September, however, Europe and insurance shares tumbled to minus 24% for the year, a direct result of the European and sovereign debt crisis. News was even worse, unfortunately, in the Asia-Pacific region, where insurance indices were down over 24% as local and economic conditions and unprecedented cat losses, like in Thailand, were compounded by gloomy economic news from the US and Europe. Despite all the negativity, though, the US insurance sector ended 2011 essentially unchanged, much like much of the broader stock market here. As we move through 2012 and economic activity begins to improve, so too should the demand for insurance. Interest rates, remember, remain fairly low, and the fragility of the global financial system does not suggest tightening from central banks. This should add some measure of stability. In addition, there are signs that the US economy is improving, which may provide some reassurance in other parts of the globe. Still, many of the challenges of 2011 continue into 2012, including the vagaries of local and regional economies. The key variable for insurers and reinsurers in 2012, price. But with excess capacity in the market and stiff competition, that's not your typical recipe for a harder market. In our next report, we'll look at the performance of specific sectors of the market, including P&C, A&H, and brokers.